Good afternoon, everyone, or good morning, depending on what time of the what time it is in your part of the world. Thank you very much for joining me. My name is Josefa Hamid, and welcome to today's webinar, Support and Resistance: 5 Keys for Profitable Trading. Now, before we get going, it's just the usual standard risk disclaimer that I'm sure you've read only about 100 times, but the key for this risk disclaimer is that today's webinar is really for educational purposes only. It's not for any kind of financial advice or information advice, tips for trades, and so on. And remember, there's always risk involved in Forex or futures trading. A little bit about me. I am the senior analyst at Daily Forex, or one of the senior analysts at Daily Forex, I should say. I'm both a Forex trader, spot Forex, and a futures trader. I actually started out as an equities trader just over a decade ago before moving into Forex and a couple of futures contracts as well. The majority of what I do is based around Forex. But I think the most important thing you can learn about me right now is that I use technical analysis exclusively for my decision making. So I generally rely on the price chart. I take into account the economic calendar depending on what the announcements are going to be. So, of course, a couple of weeks ago, it was the US election. It was very hard to avoid. So I made a point of not entering any new trades, etc. But otherwise, really, I'm looking at the price chart and not much else. And I'm based in Toronto, Canada. So I know many of you from different parts of the world. Give me a shout. Let me know what part of the world you're from. If you want to type it into the chat box, and if you happen to be in or near my city, there's somebody here from Jamaica. Thank you for joining me. Switzerland. I went to lunch once for Switzerland. It was fantastic. Literally flew into Geneva for lunch. Somebody from Ottawa, Pakistan, Namibia, Manchester, UK. Craig in Manchester. I went to school in Manchester. That's where I did my degree. South Africa, Ghana, UAE, but I'm Sudanese. I've been to UAE a bunch of times, Dubai in particular, a couple of trips to Sharjah. Great. That's a great international crowd. So I think this is the evening for Manchester and South Africa. So good evening to you guys. Thank you very much for joining. To the person in Ottawa, if you're in, I know we're in lockdown at the moment in our province, Ontario. But if you happen to be around and things open up in the GTA or Greater Toronto area, give me a shout. Okay, that's enough geography. I'm being asked, am I registered as a trader in Canada? I'm a retail trader, so I'm a private trader. I'm not I don't trade other people's capital. And Pelayo Tony rather, in Orlando, Florida. Nice to meet you, Tony. Hope it's sunny though. It's snowing here. All right. Let's talk about today's webinar, the 5 keys to support and resistance. Support and resistance is really going to be foundational to your trading. You know, it's one of the things, the first thing I'd say for any trader looking at any chart is you want to get an idea of the market condition. Is it in a trend? Is it in a range? And if you're in a trend, whereabouts in the trend are you? What's lining up? Are you in a nice non-volatile trend? Are you in a volatile trend? Is it correcting, and so on? And then once you move on from there, you want to start identifying support and resistance levels. And many of you might have asked yourselves things like, okay, what is support and resistance? How do you find those support and resistance levels? What are key levels in Forex? What's a good support and resistance trading strategy, or how do you trade with support and resistance? And those are some of the questions we're going to be answering today. And we're going to put it in the form of 5 sequential keys. So let's have a quick look at what support and resistance are. So this is just a very simplified diagram of a chart. And when we are talking about support and resistance in today's presentation, we're talking about horizontal level. So anything that's got an angle to it, that's really much more of a trend line, or it might be part of a chart pattern. But today we're talking about specific horizontal levels where the price stalls or stops out or makes a peak or a trough, and so on. So here what you're seeing on the screen is a support level, and conversely, you have on the other side, you have a resistance level. If you have questions, I know I've got everyone to type in the locations. If you have questions during the webinar, absolutely feel free just to ask away. I'll be more than happy to answer them. And if you have any comments as well, I'm going to open it out for Q&A towards the end. So that's support and resistance right there. Here we go. Just a quick example. This is gold. This is the 4-hour chart in gold, or 240 minutes. And here's if you look at that chart, where can you see some levels? So here's a key support level that I identified recently on gold, and you can see it's got broken at the end of there. It broke through that support level. So there's 3 key touches. Okay, so this is a quick example of a support level. Okay, so the first key to trading support and resistance is to trade those levels. So you're going to see me abbreviate support and resistance on the screen to S/R. That's pretty much the standard abbreviation I've seen that most traders use, or most blogs and Daily Forex. We use that occasionally as well as just a quick abbreviation. So trade SR levels or support resistance levels from the higher time frame. And this is actually a key that you can apply to any form of technical trading. You really want to always make reference to those higher time frames. So if you look at those time frames, these are some of the key time frames you'll come across. You got 5-minute on the left, you got up 1, you got 15-minute, 1 hour, 4 hour, daily, and then weekly. Of course, you might be trading on the very small end of the 1 minute, and right at the high end you can look at monthly charts even, and of course you can get time frames in between. You can do the 7-minute on MetaTrader 5, for example, MT5. You can do 5 hour. I've got a good friend who trades a 5 hour. You can do the 2 weekly if you like, and so on. But these are really some of the key time frames. And what many traders will do is they'll put an imaginary line between the hour and 4 hour. And generally anything below that 4 hours, so looking by the 1 hour time frame and below, is considered the lower time frames or short-term trading. Anything that's 4 hour and above will be considered the kind of higher time frames. Now, normally speaking, for support and resistance, what I certainly like to do as a trader is I like to mark the key support and resistance level. So whatever time frame I'm trading on, whether it's the 15-minute or even, I haven't traded the 1 minute in years, to be quite frank, but you might be trading the 1 minute, the 5-minute, or the 15-minute, the hourly. But really, you want to mark out the key support and resistance levels of the 4 hour and daily. Occasionally, the weekly. I might check a weekly chart maybe once a month or less, but for any particular forex pair, but really the 4 hour and daily, that's where you're going to get your key support and resistance levels. And you can also execute from those timeframes. But certainly in terms of support and resistance, you're really looking to execute. If you're looking at the lower timeframes, you don't necessarily have to be. But if you are looking at the lower timeframes, it's really the 1 hour, 15-minute, 5-minute that you'll be executing on. But that's not really where you're drawing those key support and resistance levels. So this is the Euro Australian dollar. This is a current chart right now. And this is the daily chart. So each candle represents a day. And I've marked out what I think is a key support level. So it's often these levels are not exact lines. They can get breached a little bit. What matters is how often they close above or below or stay there. So where I've marked this level is I've really used this area here. The second yellow arrow is my key point, and it closed there only for a couple of days. It quickly reversed up earlier when it came down to that level, but this is really what's reacted the most. That's why I've chosen this level. So it's and I'm going to talk a little bit more about that later on in the presentation. So it's really reacted quite hard to that level. So Evok is asking me, am I using TradingView? Yes, for these presentations, I use TradingView. I trade from AvaTrade. That's my platform. I use the MT4 for AvaTrade. So when I do my market analysis for Daily Forex, I'll actually be using AvaTrade MT4. For prepping these graphics, there's still images that I've inserted into PowerPoint. I use TradingView. I like TradingView as well. TradingView I think, is excellent. I only discovered it maybe 4 or 5 months ago, and I found it really great. This is the second arrow is is where I've marked my support off. And you can see earlier that the first arrow, it dipped below it, but it really rejected that. It had rejected that level. And when it first came down to that level, it it rejected it, and when it did close up below it, it quickly reversed. But the reason I'm using here is because this is where the biggest reaction has been in terms of price. Okay, so now it's just sitting at this level. It's just sitting dead straight on this level. So if I want to trade it as a support, the first thing I'd say is I will be probably counter trend trading here, because the trend has been coming down. So really, I want to be looking for maybe bearish positions. But if I decide, okay, I want to be brave, this is the long-term daily chart, since June earlier this year, and it's sitting on that level. The best way to trade it, I'm just to zoom in from the daily. I would go right down to the 15 minutes. And this is the same level now, just zoomed into the 15 minutes. And you can see here, it's already started to reverse. And here now you can keep a tighter stop than you could on the daily. You could maybe keep a stop just a little bit further below here, and you could start taking the move up if it turns back around. And here you can see the price has already started to turn up. I prepped these charts early this morning, so you could check the euro Aussie dollar and you can see how it's doing, if there's a potential support that is holding and it's worth trading. But it's on the 15-minute now. You can get a much tighter stop. You can see you can't see it on the daily, but you can see the price is actually stalling and turning around here on the 15-minute. So really, if you're going to trade, when you're trading support and resistance levels raw, you want to be using multiple time frames, at least two. And your key time frames are, again, the 4-hour and the daily. So in my case, for this particular pair, I've used the daily to find a key support level, and I've gone down to the 15-minute for the execution. Okay, key number 2, finding support and resistance. Where has price reacted the most? And I want to distinguish between the reaction of price in terms of how much it's reacted versus how many times has it touched that level. A level can be touched 2, 3, 4 times, and that in itself makes it a stronger level. But what I will say is that what really matters is what's been the reaction of price, and that matters more than the number of touches. So that's the key distinction in this key number 2. So again, we're going to go back to gold. I've been looking at gold. I've been trading it recently, so I had a good eye on it. 4-hour chart. Now I'm going to, instead of looking at support, we're going to look at a resistance level. So this is I'm going to show you the resistance level that I've marked that meant a lot to me when I was trading it. And I'm going to show you where other people might have marked it and why I didn't choose to mark it there. So this is the resistance level that I've marked. Now, you can see at the time I'd marked it here before it, and it did respect it here, blipped it here, and then it really made a hard fall kind of around beginning of November. I remember that, and I think equities, S&P 500, that day the US equity market took a big upswing, and there was an inverse correlation between the two. Okay, so a lot of people might have marked this area here, this zone here, for gold as a resistance level. So why did I not mark here and mark here instead, where my yellow line is? And the reason is I wanted to see where has price reacted the most, and it was here that it actually reacted. When I think about this fall, the fall didn't really start here. It made a fall, but then it was a proper correction here. Here is really where order flow came in, selling orders came in, where the imbalance to the sell side or the bearish side started. So when you're looking at a chart, you're kind of eyeballing it. Hey, where did the imbalance start? Where did the bearishness start? Or bullishness, depending on the chart. For me, it was here. And that's when it fell. And when it came back up, that's again where it reacted. So this is probably where a lot of orders are. I know a lot of people don't use volume or volume profile for Forex because of how the market is structured. Forex isn't a centralized exchange, but it's it's probably where, if you had to throw up volume or market profile, that's probably where the volume kicked in. I'm being asked a great question, actually. How long are you looking back? Thomas, thank you for that question. How long are you looking back in the past to identify support and resistance? This is about as compressed as a chart I look at. When I do my high time frame analysis, I could go back a couple of years on the daily, even 2-3 years on the daily or weekly, and I want to see if are we near any key support or resistance levels. And then it goes down to something like this, where it's a few, maybe a year to less on the higher time frames, in the 4 hour and the 1 hour, and then it's about and then you can see, but this is about how compressed I would keep my charts, say on the 15-minute, and so on. Thomas, I hope that answered your question. Let me know if it did or it didn't. Okay, number 3, support and resistance level role reversal. This is actually, it's interesting. I put this as key 3. And this is the first thing I learned about support and resistance. And this is where I started making money in support and resistance. So the idea being that support and resistance will tend to reverse roles. So if you look at this trend, it's an uptrend. But if you look closely, again, it's a simplified diagram, but we'll show you an example in a second. There's a role reversal. So it made us a resistance here. When it broke through, it made a support right here. So what's happened is the sellers here are now covering their positions and buying here. There's a bunch of good crowd psychology and technical reasons about why they support and resistance reverses roles. If you want, go to fxacademy.com. There's a lesson on there about support and resistance. And if you look up on daily Forex, I've written an article about purely about support and resistance role reversal, and with an example of another chart there. So, but it explains what's going on in terms of the mechanics behind the market about why they're reversing roles. So if you want that as further resources, you can feel free to check it out. So this is an example of, now this is the pound dollar 4-hour chart again. 4-hour chart is really my sweet spot. That's where I find most of my trades, and then I can execute on the lower timeframes if I want. So here, the price has been trending up, certainly from about mid-November. You made a strong reaction here, a correction here, and then you can see the first arrow, and then the second arrow, and then you have this, and then it broke through. So this is the 4-hour. I'm going to go through, and now I'm going to zoom in to the 15-minute. So I'm just going to actually go through. This is actually better labeled. 4-hour, same chart, pound dollar, marked it with A and B. Now I'm going to zoom in to the 15 minutes. I'm going to just go back and forth. So I want to make sure everyone follows what I'm doing. A and B, these are my two. I've just marked them. There's no particular system I'm using for the letters. It's just arbitrary letter A and letter B for my two resistance points on the 4-hour. Now I'm going to zoom in and go into the 15 minutes. So this is now point B on the 15-minute that you just saw on the 4-hour. So you can see the reaction it has. And now when you see a break through the 15-minute, you can see there's a decisive break through the 15-minute. It really pushes through that B resistance, point B resistance. And then it comes down and it touches it really neatly, almost to the pip. It makes 2 touches, 1 and 2 right here. This is a live trade that I did. It's a few days old now, last week, off the pound dollar. And I got into it just after this second touch. I missed the first touch, and I got into it. That was just because of time of day. It wasn't anything about the chart that I decided to wait. This decisive push through really told me this is bullish. It really wants to get through here. And then it just, the correction here was nice and slow, kind of small candles. And my stop was about here, and there it just took off. I got I think a 3.5 to 1 in terms of reward to risk. So my reward was about 3.5 times my initial risk. And so this is an actual trade. So a question that I get asked occasionally, or we get asked at Daily Forex, is hey, what are the support and resistance indicators? What's the support and resistance software can you use, and so on. And really, the indicator or some people like to throw in a moving average and things like that. It's not a bad idea. But really, the support and resistance indicator will always be the context of the chart. That'll really will tell you the tale. So this is an actual trade, and this is literally everything I had on my chart to identify this particular trade. It wasn't anything more complicated than what you're seeing on the screen. Okay, just another quick example of a support and resistance role reversal. Aussie dollar, US dollar. Again, I put this chart up here because this is a current chart. It made a really nice, so in this example, if you look at, it made a strong reaction here. It was just one touch. So I've identified it as a resistance level purely based on just one touch down. And then it broke through, and then it made a nice support here. And you could probably identify this. It's very clean actually in the 4 hour, but it'll be even more telling on the 15 minutes if you were to zoom in. And the last thing I want to say about this chart is have a look at it. Aussie dollar, US dollar. It's made a nice resistance here. It's just broken through today, and I think it's going to come down and touch on the other side before shooting off up. So here's a live trade that's unfolding in front of you. If you think that's going to be, or if you are trading and you think it's going to be useful. Okay, key number 4. Use support and resistance to catch trends. How do we catch trends with support and resistance? So here's a trend. This is gold. This is going back some time. This is actually 2012, 2013. So just using a neat little downtrend on gold. So here's where you can use support and resistance to kind of find the areas in the downtrend. So I'll start near the top of the trend. Now, of course, near the top, right here, you don't know it's been trending up at that point. You don't know if this is correction, it's going to continue going up, or you think there's going to be a downtrend that's going to follow at that time on the chart. So here's the first support I marked. It got broken. And then it comes back up, and this is a good place now to enter. You know the support has been broken here, and it's stalling as it tries to go back up above it. A downtrend is always defined by lower high. So you've got these lower high, lower high, lower high, and so on. So downtrend is still intact, but once the support gets broken, you've got these lower highs, and it's really just now wiggling around the support level. There's an entry. Here's the next one. This is much more of a role reversal. Support was made, gets broken decisively, comes up to test it, and then it moves back down. Support, and now this is a big breakthrough. You might not have got a second look in terms of it's broken right through, bang, it's gone. You might have captured something on the 15-minute or perhaps the 4 hour, but maybe the 15-minute, and found a way, an entry near here, but against support level. So with trends, it makes these clear supports in a downtrend, or clear resistances you can trade off an internally trend, and in a trend rather. And this really speaks to the first key, looking at the higher time frame. We're now looking at the overall higher context, or the higher overall trend. Evok is asking me again, what makes it a valid breakout? So what I'm really focusing on is the lower highs. So that I'm seeing now a downtrend in play. And when it closes below, that makes it valid for me. And as long as these highs aren't taken out on the way down, it makes that valid. But really, it's the fact that I'm identifying now lower highs to give me the downtrend, and then the supports to find a location for my trade. How do I get into that trade? I'm using the broken supports to get into that trade. Once the support breaks, comes back, hovers around there, that's where I can find my entry. Key number 5, I always end webinars with key number 5, mind your risk. It's something that everyone forgets, but it's valid obviously for support and resistance trading. Set a stop loss, aim for a positive reward risk ratio. So whatever your stop loss is, you want to at least be making that much on the upside or more as a trader. And set a percentage risk on your account for each trade. So make sure each trade doesn't cost you a certain percent of your account, or make sure every trade you place will not be a certain percent of your account if you get stopped out. So essentially, you're limiting the amount a trade can cost you. Final thoughts. If the chart isn't clear, stay away. Simple as that. If you can't see, if you're having to eyeball it too much, or you just can't find the pattern, you've got dozens of forex pairs. You've got 8 majors. Look at another chart. Look at another time frame. If you want to reach out to me, we're hitting the half an hour mark. If you want to reach out to me, Huzefa at dailyforex.com. Give me a shout, shoot me an email. And otherwise, I'm going to open up for Q&A. I'm going to stick around. But thank you very much for joining me today. I very much appreciated it. And thank you to my team at Daily Forex as well. I should always mention that. Thank you for my team at Daily Forex. Have a great day, guys. Thank you, Bagara. Thank you, Tarek. Appreciate it.